doing good tonight. Thank you so much for watching the channel. We're just getting tuned in here. So I think everyone can hear me and see me okay. So appreciate everyone watching us tonight on Angelo Christian Financial Live. Remember, we've been doing these live sessions now for the beginning of the year for 2021. And the whole purpose behind our live sessions is to obviously educate you guys, empower you, teach you about finance, teach you about loans. A lot of good stuff I want to talk about tonight are really interesting things that are actually going on in the market. FICO score 10. The new Ultra FICO is coming out by the end of this year. I want to talk about that. We also have some one-year self-employed home loan programs. Remember, people watch Angelo Christian. It's where America goes for funding. You can learn about finance, real estate, loans, and investing. We're actually a mortgage company. We're not a YouTube channel or just an educational channel. We're here to educate you, empower you, and teach you about loans, teach you about finance. We've shot over, I think, 750 videos on our YouTube channel. We started doing YouTube videos in 2017. We've been lending. Hey, Valerie, good evening. Good to see you. We've been actively lending in America for almost 20 years and helped hundreds of thousands of people. We do all different types of loans. Hey, Kevin, good evening. Hey, Andy. Angela, good evening, everybody. Yeah, remember, and we do this every Thursday night. Every Thursday night, 7 p.m. Central. I look forward to this. I love talking with you guys, chatting with you. We also have our 4 videos that we do every week. You know, we have 4 YouTube videos that come out every single week: Monday, Wednesday, Friday, Saturday in the morning. We post them on our YouTube channel. We post them on our Instagram, official Angelo Christian. We post them on our Facebook. And we're here just to change the world, educate people, empower them. Our thing is, how do we help somebody? How do we make a loan work? We're certainly not perfect by any means, but the biggest thing with our company is that we try to care the best that we can on how to help somebody to improve their life. And a lot of mortgage companies are not like that. They don't operate like that. They're trying to, obviously, in it for a maximum profit the best that they can. And we have a different view, a different belief on it. So again, I'm not saying that we're perfect by any stretch of the imagination, but we certainly try. There's not a lot of companies out there that are going to do a YouTube live and talk with you and answer your questions and also try to get you your loan at the same time. A lot of YouTube channels are out there to provide information, but they're not actually actively taking calls and dealing with people's problems, trying to solve people's problems, and doing the best that we can to cater to that. So that's a big thing that we do, and how we're different is and then we also offer a plethora of loan programs. We do all different types of financing. We do FHA, VA, USDA, conventional, hard money, no documentation loans, commercial loans, construction loans, Fannie Mae, Freddie Mac, and self-employed loans. That's one of the loan programs I want to talk about tonight, is the self-employed one-year program. We have a special loan program for self-employed people where you just have to have 1 year of income. So 1 year of W-2s, 1 year of 1099s, 1 year of tax returns, 1 year of bank statements. Now, you have to be self-employed for at least 2 years. So the minimum self-employed requirement is 2 years, but you only have to show 1 year proof of income. So you can show 1 year 1099, you can show 1 year of tax returns, 1 year bank statements, and you can actually qualify for the loan. So it's quite lovely if you're self-employed. You don't need tax returns. We have a 1 year tax return program, but it's actually, if you can't show your tax returns, you can only show bank statements. Maybe to show a 1099. I was helping actually a YouTuber get their loan in South Florida, and all they had was a 1099. They made great money. They made $1 million a year on YouTube. Buying a $2 million house in Fort Lauderdale, and she just used her 1099. She didn't need tax returns, didn't need pay stubs, didn't need W-2s, and her bank's like, no way, we're not going to make that loan without tax returns. We got her approved, we got her funded to be able to purchase her property. She bought a $2 million property, beach property. That's what we do. That's how we're different, how we're helping people to make a difference in America, right? That person, paid rent, 15 grand a month, couldn't get a loan for their own bank, made $1 million a year. Boom, we got them funded for their new mansion, their new beautiful home. That's how we're different, Angelo Christian, is we want to be in there to step in and make that loan. We also cater to a ton of investors. A lot of investors, they don't want to deal with the bank's nonsense, the bank's BS to get a loan approved. We have investor cash flow loans where there is no income verification. You don't need tax returns. You don't need W-2s. You don't need pay stubs. We can just go off of the rents off the property, underwrite the property based on the rental income off of the property to determine your loan approval. So it's an asset-based loan. You don't need tax returns. You don't need W-2s. And you can accumulate as many rental properties as you want. Interest rates are great on these programs. Interest rates are starting at 4% on a 30-year fixed, guys. So it's a no-brainer. You just have to put 20% down. You can put more money down. But I mean, the thing is that, what I'm seeing is like this huge unwind of Fannie Mae and Freddie Mac wanting to get out of the business. They're not even really wanting to do investment properties or second homes anymore. So the thing is, you see a lot of these other investors, other non-QM lenders stepping in to make these loans because they have more of an aggressive appetite to be able to cater to self-employed, cater to investors, to make those loans, to help people to flourish the economy, to get the American economy going. Because let's face it, the era that we're in right now, more and more people, they have all different types of jobs. Some people got 2 or 3 gigs. People have multiple flows of income, right? They don't, not everyone has a 9 to 5 and gets a salary. You got people that do stuff online, they do digital businesses, they do all kinds of stuff, and they can't document all their income, right? But they have cash, they got money. So that's a great program to help you if you're self-employed. We want to be here to get you the funding. That's why we're here. So reach out to us. You can call or text us always at 832-431-6331. You can text us there anytime. Or in the YouTube description, you can actually, you're super early in the morning and you start the videos by saying good afternoon. Yeah, that's a good point. Well, when I shoot the videos, it's the afternoon, but we release the videos at 6 a.m. And the reason why we do that is because we show that our statistics and studies show that more people are likely to check their email in the morning than they are in the afternoon. Most people are out and about in the afternoon doing stuff, so they're not really checking their email. So the thing is that we shoot. I don't shoot the videos live at 6 in the morning. I'm doing this video live with you right now, and it's 7 o'clock at night. But when we do the pre-recording in the studio, that's in the afternoon, right? But we're just releasing the video at 6 a.m. to you, but it's not a live video. It's a pre-recorded with a preset date. So hopefully that helps to make sense. So, but anyway, yeah, I mean, that's our mantra, why we're here, what we're doing, why we're different. We're here to help you guys, educate you, empower you to the best that we can. And like I said, we're not perfect, but we do try to go every step of the way, every ounce to make a difference and serve. So that's a big thing that I want to talk about tonight is the 1 year self-employed. You only need 10% down starting, but you have to have a 700 credit score. So minimum 700 credit score for 10% down. If your credit score is 660 to 699, it's 15% down. Armstrong, do you finance modular homes? Yes, we do finance modular homes. Modular is considered single family, Armstrong. So with modular, you can do FHA, you can do conventional, you can do USDA, you can do VA. Modular is basically considered single family. So no big distinguishment. Now, if you go to mobile or manufactured homes, those are completely different type of properties, and they have completely different type of requirements. Okay, so but for modular, those are considered single family. Then those are underwritten the same. There's no distinguishment, no difference on those. So I hope that helps to make sense. As the minimum credit score for FHA right now, Joe say it's 620 for FHA. No, Angeli, I think somebody else answered the challenge question. Go back and watch the video. I don't think you were the first one that got it right. If you go back and watch the video, the other person, I can't think of the name, but they won. So, hello, do you do HUD with FHA? HUD is basically the same as FHA. So, depends on what do you mean to use HUD and FHA. What do you mean by that? So I'm not sure because HUD is basically one and the same with FHA. So HUD is, urban housing, urban development, and federal housing. It's under FHA is under HUD, and so there's not a specific HUD loan unless you do a 184 and Indian loan. I'm not sure what you're referring to, but I hope I'm not sure if I answered your question right either. So I'm not because I gotta make sure that I understood what you said. But so anyway, we got that for self-employed loans. If you're self-employed, hey Wanda, good afternoon. How are you? Good to see you. Thank you so much for checking us out. What else? The other thing I wanted to bring up is hi UDC. How are you? Good evening. Remember, if you guys have any questions, please ask me any questions that you want. Don't forget to give me a big thumbs up in the YouTube. That means a lot to us. Give it a thumbs up. And if you have any questions about real estate, credit, investments, lending, mortgages, requirements, loan requirements, please shoot away, fire away. Let me know what you're thinking. We did talk about, the requirements for the 1-year self-employed loan. I hope that if you guys know anyone that's self-employed, hey Jesse, how can I get a loan package in buying the land and already have a mobile home? Hey Valerie, good evening, good to see you. Thank you for giving me a thumbs up. Jesse, you can do a land home package or one-time closed construction where you can get the funding to purchase the land and do the home. Hey, Amira, meaning to buy a HUD home. Oh, cheap. Oh, yeah. You could buy a HUD foreclosure. Now the thing is, if you buy a foreclosure and you're not doing a rehab loan, the house has to be habitable. It has to be move-in ready. You can do a one-time close on a modular. Yes, you sure can, Armstrong. You can get the funding for the land and the home all in one closing package. Oh, second job to raise your approval amount? Okay, good question, Andrew Lee. How long do you have to be at the second job? You have to be at the second job. That's a great question. You have to be at the second job for at least a year, Andrew Lee. So at least 1 year at the second job to be able to use that income. That's a great question. I'm glad that you brought that up. A lot of people aren't aware you have to be at that second job for at least a year before you can actually use that income. And you could buy a HUD home, but just make sure if you're not doing a rehab loan that the house is move-in ready, because you can't do conventional or FHA if the house is all torn up and it needs rehab, unless you do a rehab loan. So if you do a rehab loan, that's fine. When you can buy a house that needs a lot of work. The thing is, I already have the mobile home, renting the owner of the land, now willing to sell me the land. Yeah, you could. Excuse me. You could potentially, if you have the home on the land, you could wrap it all up with the land. And I don't know if you need utilities, if you need a well or septic, but you could get all that wrapped into one loan. Now the thing is that there's going to be requirements. Okay, you have to have certain credit requirements, at least a 640 credit score. You have to be able to verify your income. The other thing is that there's minimum loan amounts. You usually have to have a minimum of a $200,000 loan for this type of program. So if you're doing a really small, like 80 or 100,000, it's going to be really tough to make it work. So the minimum loan amount for these one-time closed constructions are about 200,000 and higher. So it's minimum 200,000. It has to even go higher than go 500, 600,000 or whatever. So, you just have to be mindful of that because, if it's over 200,000, it's great because you can get everything wrapped up and included into one loan, and it's very attractive. And it's awesome. I'm a big advocate. I love construction loans. I love one-time close. I think they're wonderful loan programs, and I think that it's good for everyone out there, you consumers, because buying a house right now from a builder in the inventory is very difficult. It's very challenging. And so this gives you some ammunition on your side that you can buy the land, you can build the house, and it's very encouraging. It's also exciting too. You'll be able to build your own home. That's a cool thing. That's a cool feeling to have. It's stressful. I've been there before. It takes a lot of time, a lot of energy. But because there's a lot of stuff you got to think about. I don't know. I took it for granted, all the stuff that goes into a house. But it's probably over 1 million details, 1 million for sure. It's everything you can think of or maybe you can't think of that I didn't think of when building a home. So but I think it's worth it in the end. I think it's definitely worth it, so for sure. So, but we have those type of loan programs for you. There's VA construction, FHA construction, USDA conventional, all different types of jumbo construction, all different types of construction loans out there for you, depending on what you're trying to do. So anyway, so that's a big thing if you're looking to build. So I hope I helped answer your questions on that. That's a great question that you guys asked me so far. I love the questions you guys are asking. It tells me you're engaged, you're tuning in, you're watching the show. Hi, Angelo. Hi, Steve. I'm waiting for my bankruptcy discharge letter. Okay, cool, Steve. First time buyers for the down payment. I'll just log in from Japan. Oh, Willis, thank you for checking us out, Willis, from Japan. That's awesome. I got people in Japan watching us. I love it. Thank you, Willis. So the thing is that, yes, if you're a first time buyer, there are first time buyer programs that are out there that can help you to be able to purchase your home. Oh, time zone difference? Yeah. What time is it in Japan? Right now it's like 7:15 in Texas. I'm curious, what time is it in Japan, Willis? So that's cool. Um, so there are first time buyer programs that are out there to help you. The thing is that depending on what your income is, depending on what your credit score is, most of them for first time buyers is somebody that hasn't owned a home in the last 3 years. 7:14 in Chicago, yeah, Chicago Central Time. So if you haven't owned a home in the last 3 years, you have at least a 640 credit score, your income is below, let's just say 80,000 a year, you could potentially qualify for first time buyer. What that is you can get up to 3.5% down payment. Oh, it's 9:14 in the morning. Wow. Well, thank you for having your coffee with us, Mr. Wainwright. So appreciate that. So, um, oh, it's Friday morning. Wow. Yeah, Japan is. I've always wanted to go to Japan. I've heard it's beautiful. I bet. Is it beautiful? Do you like Japan? I've had a lot of family that they love it over there, man. They've always talked about how awesome Japan is. That's really cool. It's definitely on my bucket list. Priced out in the Austin market. Yeah, Austin's very difficult. Armstrong, you're gonna have to, if you're looking at a one-time close, you can do a modular and probably get it a lot cheaper than you buying a house. Austin is crazy insane right now. The market is smoking hot. Oh, Olympics, in Japan. Yeah, Japan's awesome. Japan's legit. There's no doubt about it. So anyway, so that's the first time buyer requirements. And so, yeah, Japan's really good. That's a great place. Thank you for definitely reaching out and touching base with us, man. You've been a long, loyal fan and listener. So um, hey, Yanisi, the thing is that, okay, we do have a 1 year 1099 program, but you have to be self-employed for 2 years. So the reason why, because if you think about it from the lending perspective, if you just started becoming 10, I get that call, our office gets that call 100 times a day, right? Hey, I just started a new job, I'm 1099, and I'm making all this money, blah, 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 blah. But you know what? The lenders, they don't look at it like that. They're like, look, you could lose that job tomorrow. Look, hey, this could happen, that could happen, because that's all underwriters, what they're looking at is risk. What if this happens? What if that happens? And then you can't pay the mortgage, right? So they want to see you have stability, you have a track record of at least 2 years of doing that 1099 gig, making that money, so they feel comfortable to make the loan to you. Okay? That's the thing, man. So I don't, I understand both sides. I understand your frustration that you just started a 1099 gig and you're making money. But if you don't have the history of it, then it's very hard to, it's nothing personal against you. There's nothing that's against you. It's just that they can't make the loan to you because you don't have a history of the 2 years of being 1099. It doesn't mean that you're not a good person. It doesn't mean no one cares about you. It just means that, hey, you got to have 2 years, bud. And then when you have that 2 years, then you have an opportunity to be able to get that loan. Okay? So just, hang in there. Or, the other thing is that if you do become W-2, you can always buy a house right away. W-2 is looked at differently because you're not self-employed. You're working for a company. You're working for somebody else, and they're paying you. So when you're paid by a company, that looks more legit, and you can probably, you're not having to rely on when you're self-employed. Like I've been self-employed my whole life. You got to figure it out, man. And you're going to have ups and downs, and lenders don't like ups and downs. They're like steady incline. Lenders like a steady incline on stuff. They don't like it when your income goes like this. Okay, so this is kind of how it works. So anyway, um, it is what it is, and if you haven't been 2 years, 1099, then just keep going, hang in there, don't give up. That's our mantra, our belief here. Never stop, never surrender. Keep pushing until you get where you want to go. And you'll find you'll make it happen. You'll get there. What I always say is, God's delays are not God's denials. It may not be your time right now, but it may come later for you, right? So just hang in there. With the one-time closed construction loan, you have the 3.5% down payment. There's 6% closing costs. The appraisal on self-employed loan route is income ratio still factor in. Yes, so for the one-time closed construction, it's the 3.5% down, 6% closing costs. You're going to have appraisal, that's about 500. Inspection, that's about 400. Those are the total costs for the loan. Possibly can roll those closing costs in the loan. Definitely have to pay for the appraisal and inspection of 3.5% down. So yes, if you're self-employed, debt to income ratio still matters. The maximum debt ratio, the house payment cannot exceed 40%. The back end debt ratio cannot exceed 50%. So those are the maximum ratios on a self. They still look at the debt to income ratio. That's still a factor. That's still a thing. That's still a concern. Okay, so be mindful of that. They do care about debt to income ratio. They do monitor that. Only on investment properties do they not look at debt to income ratio. On investment properties, they do the underwriting on the rental income on the property and underwrite the property. They don't underwrite your debt to income ratio per se. They underwrite the property. Okay, so a huge difference in the underwriting type. All right, huge difference in the type of underwriting. So I hope that helps to answer your question because it does make a big difference. So when I say that your front end debt ratio can't exceed 40%, what I'm saying is your house payment cannot go over 40% of your income. All right, transfer to Texas, and I want to know if I can use my VA again. You could potentially, Mr. Wainwright, use your VA. Yeah, you could. There's a few things that would have to happen. You'd have to, if you have your current VA property, that would have to be leased out and then be claimed on your taxes. That's number one. And then the other thing is we have to check with your DD 214, your certificate of eligibility, to see what your VA entitlement is. Because we have to see if you have enough VA entitlement to basically to purchase the house that you want. So in other words, if you use your VA before, you've used up some of your entitlement, then you can access your bonus entitlement, but we have to get your DD 214, run it, and then see how much you can go up to on tier 2 eligibility for a VA loan. So in other words, you might have used, let's say, 300 grand for a VA loan, and now you want to buy another home for 300 grand. We have to check and see with the VA if you have that eligibility for the 300 grand. If you do, great, but let's find that out up front. The other thing that's also very important, if you're keeping your other VA property and you're not selling it, then you're definitely going to have to lease that out and claim that on your tax returns. The VA, they want to see you put that on your tax return. So for this year, if you have it leased out, claim it on your tax returns as a rental, so then you can take it out of your debt ratio. If you don't lease it out and claim it on your taxes, they're not going to take it out of your debt ratio. Then you're going to have an issue with your debt ratio. Okay, so just keep that in mind because they check all this stuff out. So anyway, I think someone else said, the debt. Yes, we have rate match as long as it's legit. As long as it's legit, Andrew Lee, and it makes sense. A lot of times, what you get from another lender may not be 100% accurate. But yeah, if it makes sense, we can match it. We'll match it. That's a good question. I like that. So the other thing that, going back to the debt to income ratio, so you have two different debt ratios. You have your front end debt ratio and you have your back end debt ratio. Okay. So the front end on the self-employed entry. Okay, Andrew, I'm sorry. I'm okay, Andrew, I apologize. Yeah, I apologize. So it's Andrew, I'm sorry about that. That wasn't intentional. I'm reading from a distance from the screen, and I can't see everything 100% clearly. I have good vision though. or at least I think I do. I used to have 20/20 vision. I don't know if I still do, but anyway. So the other thing that the other debt ratio you have is your back end debt ratio. So you have your front end debt ratio, and then you have your back end debt ratio, which is 50% for a self-employed loan. So you can't exceed 50% on your back end debt ratio. Okay, so that means that you take all your debts that you have on your credit report, plus your new house payment, and that cannot exceed 50% of your income. All right, for a non-QM self-employed loan, it has to be below 50% debt to income ratio. But your house payment cannot exceed 40%. So I want to make sure you guys understand that, because there's a difference between front end debt ratio and the difference between back end debt ratio, and your total debt ratio cannot exceed 50%. So, and we have a ton of videos on our YouTube channel teaching people about how to calculate debt to income ratio. And I encourage you, you can go into my YouTube channel, hit search, and type in debt ratio, and a ton of videos will pop up on debt to income ratio that teach you about how to calculate debt to income ratio. Basically, real quick, you take the debt divided by the income. Always take the debt on the top, divide by the income, and that'll tell you where your debt to income ratio is. And for income, you can use your gross income. They don't use your net income, they use your gross income. And it's only income that you can verify. If you can't verify the income, they will not be able to use it. So if you make cash money or undocumented money, they're not going to be able to verify that. They won't be able to use that in your debt to income ratio calculation. So anyway, I hope that that helps make sense. And the other thing I want to talk about is the FICO Score 10. It's a new FICO score model that's supposed to be coming out. I did a podcast on this. It's coming out, I think, next week, the FICO Score 10 model. And the big thing with that is it looks like they're getting more stricter on delinquencies, and that could hurt your credit score. And also, there's something called Credit Predictor on FICO Score 10. I'm not a big fan of this Credit Predictor thing because it takes the last 2 years of your historic credit history, and somehow it takes that last 2 years and does a pass forward in the future to determine what predictively what you're going to do with your credit, and somehow that's going to give you your credit score. So it's not really fair, in my opinion, because your past doesn't equal your future. Now, a lot of people don't think like that. FICO Score 10 is supposed to be coming out in the beginning of 2022. So I'm not a big fan of the Credit Predictor because, people's lives, they change. And so, you can't say, I'll answer your question, Andrew, in a second. So people's lives change. It could get better, it could get worse. And just because I bought a house 5 months ago and I'm planning to get a Heloc, is it still enough time? Should I wait? Possibly, Tony, but it depends how much equity you have in the property. To get a Heloc, mostly they max out at 80% loan to value. So if you don't have, below 80% loan to value, a Heloc may not be a good idea. I don't know. You have to see how much equity you have in the property. If you have a lot of equity, then it's a good idea. But if you don't have a lot of equity, then it's not a good idea. Andrew, if you're back to work and if you're either W-2 employee and you're hourly or salary and you've been back to work for 9 months, it's okay. But if you're self-employed, you're probably going to have to be back to work through the rest of this year and produce a tax return 2021. And then you'd be ready to go next year. You're W-2, Andrew? Okay. You should be fine if you're back to work 9 months. I do think the new credit rating will be harder, Wanda, to qualify for. And you can research FICO Score 10. And I'm doing a podcast on it next week. I don't necessarily agree with, they're going to be more stringent on collections and charge-offs. So that's going to hurt your score worse if you have that 20% drop. Hotel industry, yeah, you should be okay. I mean, everyone understands what happened to the hotel industry during COVID. Everybody, most people understand that have been, alive in the last year. So, anyway, no, but credit score 10, basically, if you had issues with credit and you're not paying your bills on time, I think it's going to be harder to get a loan, and it's going to hurt your credit more and ding you if you've had credit issues. The bottom line, if you're paying your bills on time, you're managing your credit, you're going to be fine. But if you've had issues in the past, I'm worried for people like that because It's going to make your score go lower. It's going to affect you more. So I'm not a big fan of it. Yes, yeah. I mean, if you're self-employed and you have a lot of write-offs, go with a self-employed loan, bud. Car dealership use a FICO score 10, probably. No issues on your credit, then you should be fine, Wanda. But there are people. I'm going to tell you, in my life, I've had issues with credit. When the recession hit, I had a 490 credit score. And I'm not afraid to talk about it. I had my wife and my mother got cancer at the same time. I had to take care of them. Back then, there was no Obamacare. It was Angelo Finance. Paid for all the medical treatments. When you get cancer, it's very expensive. It's over $500,000 in medical bills. And I made a decision to take care of them, and I let my credit go. And so credit score 10 wouldn't be good for me if that's the situation you've been in. So because if that's a predictive on the future, it's not, because I have an 800 credit score today. So people's lives, they can change, they can get better, they can get worse, and to predict someone's future off their past, I don't agree with that. So sounds good. Self-employment, 10% down, yes. They can see if you delete in chart. Oh yeah, possibly. And they might check that stuff. You're right. That's true. They may check that stuff. And so, I don't know. We'll see what happens. I mean, I don't make the laws on that stuff. I mean, I have to abide by it and use the FICO score 10 when they roll it out. I'm just telling you my opinion. Everyone's entitled to an opinion. And we'll see how the calculation, how the algorithm works. I don't know. We'll find out more about it. So, so yeah, I do try to give back when I can. I do. I mean, we donate to Susan G. Komen, the Breast Cancer Foundation. That's how I lost my mother to breast cancer. And so my wife's still here. She made it. She had skin cancer, melanoma. She survived. I do care about that kind of stuff. It does matter. I think you got to give back. You got to help people. Help people make it. Not everyone is born with a silver spoon in their mouth. A lot of people, they have the struggle. I grew up in the struggle. I grew up in the streets, and so I do. My heart does go out to people that are struggling, because I know how it feels. And I want to try and help people. And actually, that's why I wrote this book here, King of Real Estate. To teach people how to get into real estate, to become top producers, to become successful, to make something more of themselves, to take their life to the next level. It's a free copy. You can go to my website and you can get. I'm not trying to sell you anything. It's free. I'm just saying, if you want to learn about real estate, I built Real Estate University, which is an online platform. And this is a book that I wrote. It's called King of Real Estate, and it teaches you how to run your own mortgage company, to build your business. It's on Amazon. Yeah, it's on Amazon. That's right. And it's a great book. It's not a big read. It's a small little read, but it's just something that I wrote. I put it together actually like in one day. So and I think that if you have a chance to read it, go for it. So that's a good question, Armstrong. I don't know, man. I mean, it's if they roll it out 650 for 650 is not bad, Andrew, for an FHA loan. You can still get a good rate. Probably still a rate in the 3.5% range for 650 for FHA. If they start using FICO, it's going to be so there's no law that requires a lender to adopt a certain credit score. It's just when that lender wants to adopt it. I mean, some lenders may never adopt it. They may never take it. They may just say, no, I'm using FICO score 5. Like right now, we use FICO score 2, 5, 8, and 10. I'm sorry, we use FICO score 2, 5, and 8. We don't even use 10. We may not, I mean, I don't know when we might use it. I'm just telling you that it's coming out there, and lenders may use that, and it's going to be harder to get a loan if it hurts your credit score. Idaho is very pricey. You're right. You're right. So anyway, I'm so glad that you guys watched our channel. That's why we're here, to educate you, teach you. And so I want to go to the Amazon giveaway. Remember, every Thursday, 7 p.m. Central, we do the Amazon giveaway. We give you a free $100 Amazon gift card. So I'm going to actually be giving that away. We don't have an office in Phoenix. We lend in Phoenix. So we definitely lend in Arizona all day long. So call or text us at 832-431-6331. We also lend in San Diego. We lend in Cali. Love lending in Cali. Love Cali. So please reach out to us. We're here for you to make a difference, to change your life, to empower you, to give you the funding that you need to take your life to the next level. So I do want to go to this Amazon question, the giveaway that we promise you guys every Thursday, 7 p.m. Central. Let's see if you can answer the question, Andrew. It's all about whoever answers the question, and then we'll hook you up with the Amazon gift card. So before I go to the Amazon gift card, does anyone have any other questions for Angelo? Does anyone want to ask me anything on your mind? Remember, it's an open forum. You don't have to hide anything or censor anything. So who has anyone have any questions for me? Let me know. Forever hold your peace. If you have a question about something, or let me know. We're here to help you, to answer those questions, to empower you. If you have something on your mind, don't be shy. Let it out there. It's all good. We're all here to help each other, to grow, to expand, to make a difference, to contribute. So if you have questions, please let me know. I'm happy to help you to answer those questions. If not, let's roll into the Amazon giveaway. So the question is, someone brought this up at the beginning of the show, and I want to be able to answer that question. It's, how long do you have to be at your second job to get a home loan? So go, whoever answers that question first. How long do you have to be at your second job to get a home loan? No, not 2 years. No. How long at your second job do you have to be to get a home loan? 1 year. Andrew got it. Andrew, okay, you got it. Finally, Andrew got it right. You got it, Andrew. 1 year. So you have to be 1 year at your second job before you can get a home loan. And it's not 2 years. It's 1 year. Yes, Valerie, you're close. But Andrew got it first. So Andrew, text me your email. Text me at 832-431-6331. Send me your email, bud, and we'll hook you up with that Amazon gift card. You were paying attention tonight. You stayed on it like a hawk, and now you're the lucky winner. So I appreciate you guys watching Angelo Christian. Take care. We love you. Be strong. Watch all my stuff on my channel. Please enrich yourself, enrich your mind, and empower yourself. Make the most of yourself. Take care of yourself. Take care of your mind, your body, your family. We love you guys. Take care and peace out. Later. Bye-bye.